So the Federal Reserve just lowered interest rates by a quarter basis point. We had a whole slew of earnings come out, including Meta, Microsoft, and Google. Meta earnings came in as a disaster for the stock. So we're going to talk about that, where I think that stock is headed. And then we're going to talk about the overall markets here, because it looks like inflation is a little bit sticky. And Jerome Powell did say that they may not lower interest rates at the December meeting, which could cause some volatility in the market. So we're going to go over that. I'm going to go over specific price levels. But before we jump into it, remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary. Now, if you take a look at the account, we're now at 1.436 million. This morning, we were at 1.423. I added a 25K capital contribution for transparency purposes. I always let my audience know when I do capital contributions to the account, because I feel that's important to grow the account. Also, if you want to see me hit my 8-figure goal in this account, be sure to be subscribed to the channel by clicking the subscribe button down below to follow along the journey. Also, if you get any value out of this video, I would appreciate it if you hit the thumbs up button for me. I appreciate you being here. Now, let's take a look at the realized gain loss. I want to show you, for transparency reasons, kind of where I'm at. Today, $8,400 in profit. Obviously, results vary month to month, year to year. And then for the current month, we are currently sitting at 46K with a couple days left to go. Now, again, earnings vary here, but I also do give away free trade ideas, okay, on my Instagram. If you're not subscribed there, be sure to do so. That's in the description down below. Instagram, as well as my new X account. This has been really popping off, and I've been giving kind of insights on specific stocks here on X. And then if you do want to work one-on-one with me, we are raising prices on Options Trading University. That'll be at the top of the description. You can watch this free training here I have for you, and all our client testimonials to join our private mastermind. But let's go ahead and just jump straight into it, okay? The Fed cuts rate again, but Powell raises doubts about easing at the next meeting. So this is good for the markets. We got the rate cut we were expecting, 98% probability. We knew this was gonna happen, but okay, if we go over to the CME FedWatch tool, we could see that a rate cut for December is looking like it's off the table. 99% odds for January 28th, 2026. So we might not get that second rate cut that we were expecting before year end. And that's totally fine, because when these rate cuts come fast, the market tends to just rally up like it has been, right? And I actually want the market to go up a bit slower, so we have more opportunity to participate, make gains, collect premiums on the options, right? But again, with interest rates coming throughout next year, I'm very bullish on the markets, but we could experience some short-term volatility with this news of no rate cut in December. So let's talk about QQQ, where I think it's heading, and where the market makers expect this market to move. So we're currently trading at 635 all-time highs on QQQ, all right? It definitely blew past my 625 projection, but let's go ahead and take a look at what the market makers are saying within the next 2 weeks, okay? We'll go out 14 days. I like to go to the options chain, go out 14 days, November 12th, okay? And from today, all right, going out to November 12th, there's an expected plus or minus $20 move. So if we go back to QQQ, all right, we can expect somewhere between, all right, and let's just grab this here, somewhere between, 20 bucks above this would be 22 bucks, 657, okay? We could go as high as 657 here, all the way down to potentially 615, or actually 613, which would fall right at this base support right here where we gapped up from on October 23rd, okay? So we could head down from here. And, with earnings coming in kind of mixed, lackluster, a 3.5% pullback would actually be very, very healthy for the market. So I'm hoping for a pullback, right? If we don't get that, then we're probably gonna head higher, 657 being the expectation of the market makers on the upside. But if that happens, right, expect a more violent pullback, okay? So maybe a 5% pullback down to this 613 area. So it really depends where we go from here going into earnings, but we're gonna talk about that because earnings were kind of mixed, and that's why I feel like we could be headed back down for a short-term dip down to the 613 area on QQQ. So VIX is also at 1690. It looks like it wants to increase from here. So I guess we'll see what happens. And according to VIX cash allocation levels, I could be somewhere around, VIX is 15 to 20. We're at 16. I could have 20 to 25% cash. Right now I have about 19.7% cash. So I'm definitely on the more aggressive side of this, but still conservative that I have that much cash on the sidelines ready for a dip here, because it's only a matter of time before we get a decent sized pullback here, and this could be the catalyst. Now, Google, okay, will be the first stock we talk about. Amazing earnings, all right. Gapped up 6.5% after hours, so trading at 292, so pretty amazing for Google. I already knew this stock was going to go much higher because it is undervalued here with a very low PE ratio, considering it's an AI stock, right? But if we go to their earnings, we kind of look at the investor relations. Consolidated revenues, Q3 increased 16%, double-digit growth year over year to 102 billion, massive. Cloud revenues increased 34%. So that was a surprise on the upside for Google to 15.2 billion, led by growth in the Google Cloud platform across core products, AI infrastructure, and generative AI solutions. Okay, so net income also increased 33% and EPS increased 35%. Amazing earnings from Google. AI is really delivering to their stock, right? And it shows with this massive move upwards. Okay, so my thoughts here on Google. I mean, it's way overextended here at 293. We're trading all the way up here, which is well outside of the upper Bollinger Band here. So let's go into my position. Remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary. But if we take a look at the account, okay, I sold 2 cash secured puts for earnings, 49K worth, to collect 619 bucks. So I'll close those out tomorrow for a nice profit. And with Google running up so much, I'm not going to participate at this moment. So Google will be falling out of the portfolio for now. Unless we get a nice pullback, then I will think about re-entering and adding it to the portfolio. But that's what we want to be doing here during these earnings seasons, is actually taking profit and reallocating that cash to stocks that are maybe more beat up, okay? Now, if we go into the second stock, which is Microsoft, they just reported earnings, a beat of their Azure revenue climbed 40%. Okay, amazing earnings. Their earnings per share, $4.13 adjusted versus the 3.67 per share expected. So they beat on earnings per share. They beat on revenue, 77 billion, massive, right? And they just acquired a 27% stake in OpenAI, but that did lead to a $3.1 billion hit to net income in the quarter, okay? So the markets, especially investors right now, are thinking very short term. Okay, they take a big hit to cash flow, earnings, right? They invested a lot into OpenAI, but that's going to lead to future growth, right? That's going to lead to future increasing revenues for the stock now that they own ChatGPT, OpenAI, 27% of it, right? So the stock did fall off a little bit, 1.49% down from the close. It fell all the way down to 517, but it's slowly starting to rebound here. So you are seeing some people stepping in after hours. If we take a look at the chart, I mean, this thing has had quite the run up, but again, PE ratio is pretty good on the stock, 39, considering it's one of the leaders in the AI space. It's very quiet, boring, and one of the more consistent stocks in the portfolio. So with that being said, this is a classic example of good earnings. They beat EPS, they beat revenue, and the outlook is great. There was nothing on their outlook that showed a slowdown, right? But the stock falls, okay? This is why I love trading options, because we don't know where a stock is going after earnings. The probabilities are literally 50-50. But if I'm selling cash secured puts or trading options, right, selling options down here, I could catch the stock on the downside and get paid to do so. So I like selling options on good stocks with good earnings, but again, we don't know the direction. So with that being said, I mean, there might be some profit taking right here, right? Google had good earnings, it went up. Microsoft had good earnings, it went down. People might be taking profits at this point, which leads me into Meta, okay? Meta shares dropped 9% despite earnings beat as company takes on a one-time tax charge. So if we look at their earnings per share, $7.25 adjusted versus analysts expected was $6.69. So they beat their revenue beat 51 billion to 49. Okay, but if we look at the investor relations pamphlet, it says that they incurred a one-time U.S. corporate alternative minimum tax of $15 billion. Okay, yes, that is huge. It's definitely going to hit the balance sheet. But it's a one-time thing, right? So again, investors getting spooked, saying, hey, market's at all-time highs. Maybe we take some profits off the table and we get out of quality companies like Meta, right, with low PE ratios. And they are going to be leaders in the AI wearables space, okay, with their AI glasses. So I'm still very bullish on Meta. I have shares. I'm getting assigned on 100 shares at 730, but you could see how far it fell down here. I wouldn't be trading leaps on this thing. It's just, I typically don't trade leaps on stocks after bad earnings or bad outlook. Like, for instance, the one-time tax that they're incurring, that looks, not so good for investors for the short term. So I don't like to trade leaps short term on these things, but I do like to sell cash secured puts. So the stock is down about 8%, 8.5% after hours. My take is that this is probably going to get bought up. It's probably going to go back up into the low 700s, okay, because this is quite a drop. It's going to drop here, maybe heads a little lower, and then kind of builds up momentum and gets back into the low 700s. So that's my take on Meta. I think short term, yes, investors get a little spooked. 27 PE. It's still trading at such a low premium here. In accordance with S&P 500, it's trading cheaper than the S&P 500. So this is a stock that I want to be in long term because I think it'll be an $800,000, $900,000 stock in the long term. Okay, that's just my opinion on where I think Meta is going. But if you look at the history, it's been such a good stock to trade. Okay, so with that being said, we're going to go into the portfolio and take a look at what I have. I'll show you what I'm going to do. We have about 68,000 in shares. I'm going to get assigned in 2 days on the 730s. If the stock doesn't rebound tomorrow back up to 730, okay, I'll get assigned 100 more shares. And I have a 750 covered call that I'll be basically collecting $2,100 on tomorrow. I'll be closing that out and opening up a new covered call. And I'll just do it at my cost basis. So my cost basis is currently 745 on these 100 shares. So I could go out to the end of November, right, and sell a 745 covered call and collect $3,800. Okay, so that's what I'm going to do there, starting tomorrow on these shares because I'm still bullish on the stock, and I could always go to a higher strike later on if the stock does go up from here. But with that being said, I think we're going to see some short-term volatility, especially if Amazon earnings don't come in as strong tomorrow. We might see a little bit of a sell-off here, but 613 on QQQ I think is probably the lowest we'll see, even according to what the market makers are expecting. And, we'll just have to go from there. But if you enjoyed this video, please give it a thumbs up. I'll see you in the next update video on Friday. Take care. Have a good one.